Morning, everybody. Thanks for joining. As mentioned, Seamus Donoghue from Metaco, and just to give a brief intro, Metaco is a Swiss company. We're a Swiss software technology company that basically works with the financial industry to provide them the technology to securely manage, store, and integrate crypto and digital assets into the core infrastructure. So thanks for joining me today for the keynote speech and for being here this morning. I think as the topic was introduced, we've tweaked a little bit the title, but I think the subject matter is the same. And as we were building out the theme, what was clear is the story around crypto needs some updating around perceptions, and it's really about where perceptions are and marking those versus reality. So let's kick off here. I guess I'll share my screen. That's how we're working. Thanks. Okay, let's go. So let's rephrase this. It's time to take a fresh look at the crypto market. So what exactly are we saying here, basically? Let's think about where we have been. Obviously, the world here is, this is a quote from a leader in the traditional finance space. It'll be familiar to many of you. It's worse than tulip bulbs. It won't end well. Someone's going to get killed. It's just not a real thing, and eventually it will be closed. I'll leave it a little bit in suspense there to the end, but I think this was the reality a few years ago. And it's really a question of where are those perceptions then versus now? So let's jump to the next slide. So when we think about let's say the digital asset space, basically the revolution we're seeing, it really is transformative, basically. We're talking about taking a centralized system, which is failing for many. It's all about trust. It's all about intermediaries. It's all about tolls. It's all about, let's say, fiat money that can be issued at will, and reinventing that, flattening the financial system, basically, making it inclusive for all, thinking about peer-to-peer money, be your own bank, sound and basically money that has a critical fundamental value. So this is a theme. We're all at this conference. We all know this story. I'm not speaking to the unconverted. The question is, what are the opportunities in this space? And we all know the tokenization slide as well. This is one that's a World Economic Forum presentation. We see this in many bank presentations. The tokenization opportunity, longer term, is huge. I mean, when we think about the size of the capital markets and what can happen in terms of efficiencies and basically transformative sort of impact on that market as it gets tokenized is big. But we can even look at just 2019 and 2020, and it's probably not happening at the pace that all the consultants are telling us it'll happen at. It's big, but the question is when. So when firms come to invest in this space, the question is, how do I build this opportunity? How can I be positioned for this? And there's a lot of pushback. I mean, when we talk to our clients or banks or large financial institutions, there's always the issue, well, the market's very fragmented. There's no secondary liquidity. As a result, issuer quality is low. And there's a general perception that there's just still too many frictions. They don't have infrastructure. Investors, if there's one extra step, they say that basically the perception, particularly in the developed world, is financial markets, at least related to, let's say, most of the investable assets that we know now, bonds, equities, et cetera, they work pretty well. We know that they could be transformed, but the question is, when should a firm invest in that technology and be ready for that tokenization? Building a business case to do that is a struggle for many. So what's the solution? Well, we would say what we've observed from our clients, and I think what we're starting to see emerging more broadly in the market is, what we do know is crypto's here now, and it's changing, and it's becoming a more institutionalized asset. So the whole opportunity is probably build your business case around the crypto, and you get all the upside of tokenization when it comes, and you're ready. You can be a first mover in that space. So come for the crypto, stay for the asset tokenization. That's the opportunity, but you need to be in the game to play. Crypto comes with its own baggage, of course. There's a number of issues. We always hear it's this familiar refrain. Well, there's reputational risk. It's not. Compliance will say no. It's used for criminals. Technology, it's just not there. Basically, we don't want to lose the assets the clients entrust us with, and regulators will not be happy if we do this. Well, that doesn't really mesh with the reality of where we are today. So this is really a question of the same people that talked about it being a tulip bubble, same person rather, it's not mark to market. Most of the risk policies banks have that say they can't touch this asset class, they were written 3 to 5 years ago. And where were markets then? I mean, Silk Road was fresh in the mind. We were building into a bubble. It really was viewed as a criminal asset class. That's not the case now. And both policies are being updated. Technology. I mean, we were in a situation where the best solution was basically storing these things on a USB. It was all about centralized points of failure. That's not the case now. The technology's matured. There's many ways to deploy this. Basically, you can create, hot environments, cold environments. It's integrated with core banking. You have you have mature deployments, and these things are in production with very large global financial firms. The reg risks. Banks, regulators globally are embracing this. BaFin's a great example. They're leading the charge in Singapore. US is finally catching up. Everybody here has seen the announcement by the OCC. These are narratives that just haven't been marked to market, but I think they're changing. And why are they changing? That's the question. But the one thing that hasn't changed so much, or is starting to, is the biggest objection of all. Bitcoin is not real. It's not a real asset. It's not backed by anything. How can this be money? How can you build research on an asset class like this? And yet, JP Morgan puts their research on this. And not JP Morgan just cited as an example, but it's a great leader in this space. I mean, it's a great leader in terms of the financial traditional system, and they provide fundamental research on Bitcoin, and it's very bullish. I mean, I'm sure all of you have heard the story, but it's probably one of the best trades in the market right now, probably one of the best trades of our lifetime. So, how do we get here? Why are we here? Why does this gap exist? Well, we've gone through this cycle. I mean, this is a cycle that's the Gartner hype cycle. We've contextualized it for kind of the major steps we've seen in the crypto market. We've been through that the Genesis 2008 right into the bubble of late 2017, early 2018, and then the crash, and we're coming out of it. And of course, there were some scandals. There was a lot of scams. But I think people forget the thing about bubbles, basically, is whenever you have transformational technology, these are core stages of the development of transformation technology. So we're looking at an example of crypto, but this could be the internet, the same thing. We had the crash in 2000. This could be railroads early in the development of North America. The infrastructure gets built during these technology phases. Those initial firms may fail, transform, and we come out of it on this kind of sustainable slope of enlightenment. So where are we now? We're coming out of that. And let's look down where we're seen. And we can evaluate this based on what institutions have come. Well, there's certain institutions that came before really there was a business case. Visionaries, Abigail Johnson at Fidelity, Francisco Fernandez at Avaloq. There was no business case, but they saw that this was the future and committed their firms to the space. Other firms followed. They were all pioneers. But now I think we've shifted into this new stage, 2020, and seen it accelerate as we move towards 2021, where firms see that this is something they can monetize. There's a business model. There's a business model that can basically make money. And it's not just driven by banks speculating. There's investors that are demanding this, institutionalized. There's the payment guys, the asset managers. There is growing demand that the large financial institutions need to service, and they're responding to that. Part of that response is building a foundation of research, and we're seeing fantastic research emerge in this space. Traditional companies like Fidelity, new companies like GRAYSCALE, enabling basically the institutional investor asset class to build the arguments when they go to their trustees that this is the right place to be invested. This is an opportunity they can't ignore. Now, price drives a lot of expectations. Price drives the theme. And, we can look at basically the long-term cycle here since the kind of into the bubble of 2016, the collapse. Sure, it's been a volatile asset class. With that volatility, though, has come outperformance. And I think one of the key signs of maturity is as we've moved into the next stage, let's say the last 12 year to date, crypto has been the top performing asset. We're up 80% now. We've been through one crash in the spring, the COVID-related crash. Now, during a crash, people say Bitcoin was correlated. Yeah, sure. It was correlations of every asset class go to one when people go into liquidation. We've come out of that, and we'll see how we go going forward. But recently we've seen a decoupling correlation. I mean, we've had a pretty heavy down moves in some of the markets globally in the past week. Bitcoin's been going up, at worst sideways. Are we decoupling? I mean, but the one thing is clear is volatility is diminished as the asset class has become more institutionalized. Supply demand is obviously going to be a big factor in how we go forward. And I think GRAYSCALE, in their recent report, Q3, they saw huge inflows. And one interesting anecdote, that those inflows, just GRAYSCALE accounted for 77% of all the newly minted Bitcoins. What happens when that goes to 100%, 125%, 150%? This is one fund. The industry could see a huge rush into this asset class. I mean, notwithstanding the price performance is going to drive that alone, but also supply demand really articulates that story. And I think one of the things that we can't underestimate is the broadening use cases. What's it used for? That was one of the also complaints. It's not money. What can you use it for? Well, corporate treasuries are facing a significant problem. You've got negative yields everywhere. How do you manage your corporate treasury when you're getting negative yields on cash? You go at the curve, you're still getting negative yields. Basically, you're taking risk with no return. Bitcoin is now viewed, and I mean, these MicroStrategy is not the only one, but they've been a great brand ambassador. I mean, they're very vocal, and Michael Saylor's done a great job of bringing visibility to this with a $500 million investment in the space and almost 200 million personal investment in the space. But it's clear that it can play a role in managing a treasury asset. They need infrastructure. They need basically the banks to help them with that. Fintechs are obviously first movers. They're less risk averse. Square recently in their Q2 release basically demonstrated just the huge uptake we've seen in this. And importantly, it's impacting the bottom line now. So it's not a loss leading business anymore. It's basically contributing to the bottom line. That's not ignored by traditional payment companies, PayPal. And what's interesting here is basically you're talking about on-ramps. I mean, there's criticism in the crypto market that you don't own the keys in this space. Maybe you can't transfer them out. But we're talking about facilitating access here and bringing almost 350 million users, 26 million merchants. What can you use this? Well, sure, it seems you can. You can play. The on-ramps are being built. ONYX announced this week the new JP Morgan subsidiary or division that has 100 employees. They're looking at basically helping manage the JP Morgan coin, looking at custody, looking at blockchain as a sustainable business. And they're saying they're en route to be profitable even now, even at this early stage. This can't go unnoticed. I mean, the payment space is probably the first use case for tokenization, which is kind of, let's say it's half crypto, half, look at the stablecoin space, half this sort of corporate JP Morgan coin type environment. We could see a huge eruption, kind of a Cambrian explosion in potential stable coins, bank issued coins, because payment space is big. If you look at the banking side, according to McKinsey, the 2020 McKinsey report on payments, it accounts for almost 40% of bank revenue globally. These are all just frictions for the pleasure of transferring from A to B. Stablecoins, the crypto space, this is effectively a frictionless, almost free peer-to-peer transaction. So this is under threat. They need to respond. So there's obviously a reason to be a little bit defensive as well. But I think you look at firms like JP Morgan saying, well, yeah, this is coming. There's not much we can do. We better embrace it and disrupt it ourselves. Be the leader again in this new space. Because in the end, it can probably be much larger than the existing space if we're broadening the financial system. So where are we? I mean, it's really about, even at the highest level, the slowest firms in the market, central banks. They're experimenting. Some of them, the smaller ones, going to production. You even have China doing airdrops now. So crypto is part of the mainstream. So really regulate, the central banks, the regulators, those rules are basically not becoming roadblocks anymore. The technology is mature, is ready, and investor demand is there and growing. It is becoming, and I think we're on a very early inflection point about this becoming a fundamentally core asset to anybody's investment portfolio. Nobody wants to be first, but the risk is nobody wants to be last either. Time to build. So the opportunity is obviously still nascent in terms of the asset class itself. And I think the point is, build on the crypto. You basically can observe this, you can build, you can define it. It's not like you're missing out on the tokenization. There's a huge upside in this space alone. If there's any convergence, as JP Morgan's research points out, to gold, this is a multiple X return. The Eurodollar market, which is effectively the offshore dollar market, I mean, this completely changed by stablecoins. Capital markets, obviously the big one. And then what we don't even define here is unbankable assets becoming bankable. It's a huge opportunity. You need to be ready. You need to have the infrastructure. And why are banks still in the space? I mean, clearly everyone always talks about you can be your own bank. You don't need trusted counterparties anymore. But in the end, we don't all want that responsibility, which is nice to have as an option. But we typically have parties such as banks that we trust for our assets. And we expect that if this is a new asset, we want them to manage it with their old assets. So you're trusted, you're regulated, you're experts, you advise clients, the research, basically the best advice, where you should allocate. And most importantly, you have the clients. So you have the demand, you can channel that demand, and you can provide a service the clients want. And so let's just step back. Where have we been really? This viewed as a very risky asset, not too sure about touching it. And it was volatile, remains small. Custodians said, well, we can ignore it. Basically, there's no career risk in ignoring this asset class. It's for criminals, remains small, remains volatile. And it was basically this very negative feedback loop. But now firms are investing. And what are they investing in? Well, they're investing in that core stack, which is the foundation for crypto, but also for tokenization. You need a secure governance layer, end-to-end security around managing keys. Keys create bearer assets. You need to make sure you can control all aspects of the life cycle of those keys. Within that, you manage custody, securely storing, managing, moving currencies. Whether that's all sort of, let's say, security, availability, trade-offs, hot environments, air-gapped environments. Is it MPC? Is it hardware-based? These are all basically fundamental to the stack. Tokenization is, of course, there. You think about the stablecoins, minting these things, burning them. As a bank, if you want to create your own bank coin, these are fundamental critical processes. You need to have secure controls around those. Your stack needs to deliver that. And as the stack grows, you need to connect in with the plethora of different services that are come out of this. You need to securely interact with those. So this is a foundational stack you're building, and firms are investing now. And what happens? The largest custodians invest, they view the opportunity, the market grows, liquidity becomes more predictable. The asset class starts to become too small, too big. The asset class, they can no longer be ignored. The performance is there, liquidity is improving, more participants come, custodians, banks, others realize they have to build here because the clients need it and it's becoming institutionalized. So this whole paradigm shift from we can ignore this to it's a career risk, ignoring it basically. So I'll bring you up to date on the last quote. Just wrap this up.
Sorry, Seamus, to interrupt you here.
Yep.
But I hope you are on the end of your presentation.
Yes, I just have one slide left here. Yep. So obviously, many of you probably knew as Jamie Dimon.
So in other words, we have to continue. Sorry.
So I'll just wrap this up. Thank you very much.
Because the next speaker is waiting.
Okay, thank you very much. Just to mention that, JP Morgan's Jamie Dimon wrapped up his head around the change. I think the market's going to do the same. Please reach out if you're interested to find out more about the institutional stack. We have a booth just near the exit of the auditorium. Please visit us. Thank you very much for having me today.
Thank you very much, Seamus.